Good day to one and all. This is Dr. Sivaraman of iknowinvestors.com. So I'll be using the derived forecast and the levels and also fine-tune using the market trading technique while presenting Asian session live market analysis for this particular week, 7th to 11th of October. And we are on 7th October between 5 and 5:45, 5:35, 5:30 GMT. I'll try to explain what could be the expected market moves in this particular week and also what we might be able to see. Now, let me just briefly recollect about last week moves. So last week, it was the first week of the month. So we normally expect the volatility and the market is expected to make either way big swings. And that is being done mainly by the other players in order to induce the traders to commit wrong positions. And then subsequently, they make the trending move from the following weeks in a given month. So month end and the new month beginning time, they are known to make the trend reversal moves. And then subsequently, during the second and the third weeks, they are expected to make the trending move. So that trend we need to know in order to commit positions. And they are expected to make the upward journey in the case of Euro and GBP. There might be so many stories and you may find in the web and also other areas in the media that US shutdown is being talked about much. And besides, you also come across a lot of people giving the expressions that traders are going for safe haven, like buying yen, buying CHF, etc. on one side. Then other side, there is an interpretation that GBP has corrected big in order to take profit. So you find various sort of interpretations in the form of market comments could come. But ultimately, we need to say or we need to view what is the hidden agenda of the players and ultimately what they intend to do. Whether they have made the corrections in order to make further rise or further drop. That is the basic question of any trader. So a trader needs to understand first of all, the hidden agenda of the players in order to derive the expected market moves. And for that, there is no point in having the either way possibilities. If you think of either way possibilities, then we will wait for the market to turn in which way it is expected or it intends to make the move. Then we find that we already missed that particular opportunity. And later on, we try to go in for a breakout trade. And the players are here to track or trap the breakout traders. So everywhere you come across the danger from the other players. So ultimately, the only possibility is read their intentions and try to find out what they are trying to do with them. And then trade accordingly along with them. Then we should be able to book profit in the market. And if you fail to track them, then we join the herd of traders who normally go with the conventional analysis, like technicals and fundamental analysis. And they commit positions, and some traders say that 70% of the trades, they are successful. And some say that 2:1, the odds, they are able to make money, and things like that. Ultimately, what is more important for a trader is he doesn't want to lose the money. He wants to earn money from the other market. So for that, understanding the market is the most important thing. While understanding the market, it is something like in a man-made market. We need to read the intentions of the other set of people who are trying to trade against the other traders. So we are trying to read them by following their cunning actions in the market. Basically, the cunning actions are in the form of false move or in the form of stop-ins. And they try to pretend as if the market is going to drop in a big way and suddenly reverse it. Similarly, they try to pretend as if the market is going to rise in a big way and suddenly reverse it. This is what you come across. And last week, if you notice it, Euro made a drop from that of 1.3650 to 1.3550 area, 100 pips drop. But whereas GBP made a drop from that of 1.6250 area to 1.600 area. So about 250 pips drop. So when they made the drop of this nature, what happened? Euro GBP, the cross which has gone up in a big way, the pip value of Euro GBP is twice that of the other currencies. So basically you find that when Euro was held higher and GBP was made to undergo the correction, they can give any sort of attribute like profit booking, etc. But ultimately what they have done is, it is not an overall USD weakness or USD gaining sentiment. They only made the contrarian move, dropping more GBP and just holding Euro. As a result, Euro GBP has gone up by about 70 to 75 pips. And that is what you come across in the market. And their main objective was to trap all the short sellers, because once Euro GBP started going below that of 0.84 level, many thought that it will straight away continue to drop. So when they are taken happily, they sell positions as a breakout trade. The players have shown the other way move and induced to the short covering. So the players found more money by trapping the Euro GBP cross sellers rather than making a drop in the case of GBP. So we need it is the question of risk aversion. Okay, they made the big drop in the case of GBP and a nominal drop in the case of Euro. Then, what about the USDN and USDCH? Another attribute was given, that safe haven strength. That is, all jump from US dollar to yen, all jump from US dollar to CH. That is why Euro GBP made the drop, and also USDN and USDCH. So that is the logic. We try to get it from them. But ultimately what they have done, holding low USDN and holding low the USDCH, they made the drop in the case of Euro and GBP. As a result, all why they have chosen to handle the crosses more at that particular time, especially on Friday, because the non-farm payroll, which is supposed to be announced on Friday, got shifted. So still, last week it was expected to have it on Wednesday of this month, this week, and that is 9th of October. But subsequently, it got shifted again to the following week, coming week. So when the release of the non-farm payroll is being shifted like this, immediately you come across various rumors. The US is not willing to release non-farm payroll. Probably it might give a big reaction in the market, etc. So everybody is now focusing on the US shutdown. So when people focus on the US shutdown, then they become nervous and they do not know what is going to happen in the market. But if you just recollect in the past how exactly the market was making the moves, you know very well, we have come across the stories like double recession, we have come across the stories like risk aversion, etc. But still the market continued to make the moves, and subsequently we have also come across Euro and GBP gaining, Euro and GBP losing, and things like that. So ultimately the market, they have to bring in the volatility in order to earn money. So they just use such data release or use such concepts or the phrases which are being released from time to time in the market and take advantage, creating uncertainty to that of the traders. But we should not develop uncertainty. Once we develop uncertainty, we become surprised whenever a big move happens in the market. And once you become surprised, you become stunned. Your mind fails to think about why the market is making a move like this, or also how to protect the trade. So when you are not in a position to take a decision to protect your trade, ultimately you tend to go in for a distressed trade, cut the long position, or try to take a sell positions, or overtrade. So because in one long position, if it lasts about 50 to 100 pips, then you will like to take 10 lots and take 10 pips during the drop in order to compensate. There are some traders who do such trades, and they make such a big move, and later on make only a small move when the traders sell or hold like this, and then continue to trap. And I have been telling all along that the players are here to trap alternatively the long holders as well as the short sellers. You know, they have done last month continuous rise in the case of Euro and GBP, and they induce the short sellers, any level short sellers, to go in for a short covering. So when the short sellers found that there is no point in taking further sell positions, it's better to do a breakout trade of buy and sell. When they continue to take the buy, the players make the drop. So especially they made a big drop in the case of GBP in order to create the sentiment. Nothing concerned with the weakness of that particular currency. You know that GBP data which was released on Thursday was really good, and nobody expected GBP to correct like this. So whatever you try to give it as an attribute, and you might find that it is not working in the market, and you find some other attribute is given. So according to me, all the comments are nothing but the excuses. Nobody has really gone and seen in the market whether there was a real profit booking. And if you know that when GBP has dropped from 1.62 to 1.60 level, I am very sure that hardly about 5% of the people would have just booked profit. But the rest of the people would have gone for the long liquidation, incurring huge loss. But the interpretation is profit booking move. When you ask who has booked the profit, probably the institutions. But you call up the institutions and find out, then they will say that no, we are holding still the long positions at the higher levels. So you can understand how these interpretations are given, spread out in the market. Okay? Because I thought that I can briefly explain to you how exactly the month beginning they make such moves and confuse the traders. So we should not become victim of such moves. Now, let me explain to you the derived forecast and followed by that of the levels which are being derived statistically, arithmetically, and then we will go for the market reading. Now, it is the second week of the month. Swing and rise moves are expected. A trending move is expected to set, and the market is expected to continue to rise, and this rise will continue till end of the year and also new year. So the trend is not changed. In between, the market is expected to make a downward dip. And that's part of the game, because when all turn long, the players are not there to give them profit. They have to make the drop and induce them to liquidate the long and later on rise it. And for that, they use all the strategies like the fundamental and also the phrases like shutdown, the double recessions, etc., or safe haven currency, safe haven strategy. And these are all nothing but the phrases they use in order to convince the traders. But if the trader gets convinced, he joins the herd. And once he joins the herd of traders, and if you say simply the trend is our friend, then we know very well the trend reversals are not visible to our eyes. So basically what we have to do is expect the unexpected and always use the hedging in order to limit the risk, whatever the type of trade you do, and try to review the market accordingly. Now, with regard to the expected market moves for the 5 days of this particular week, 7th of October's initial small rise and swing at the higher level is expected. Then swing and quick rise is expected during that of the European session, and small swing and firm up moves could be seen during the US session. So normally they make small moves during the US session to start with, and then subsequently make big moves in the market, and then dip and firm up moves will be seen on 8th during start. Tomorrow, Japanese session start. They will make a dip and then rise. Then rise and slide is expected on Tuesday during the European session. And then swing and rise is expected during US session. After gaining the levels, you know that FOMC meeting minutes are expected. And then they are expected to make a quick rise during the European session. And then make a dip during start of the US session. And small firm up during the minutes release by 18 GMT. So all the data release, they will try to make use of as a trigger time, nothing more, and try to confuse the traders by making differential moves or the contrarian moves. And such contrarian moves are done in order to handle the crosses when the people are afraid to commit positions in the case of the majors. Then 10th October, Thursday, swing and slide. Then swing and firm up during US session. And on 11th, dip and rise. Start with the dip and then rise, swing and rise. Swing and rise moves are expected for the weekend. And so you don't come across the non-farm payroll is being announced in this particular week. That is what the calendars indicate. I do not know whether they will later on introduce it. But as on time, but it is not being listed in this week market schedule. So, irrespective of it, I know last week when I was explaining this, I was telling you that they will make a drop in the case of Euro and GBP during the European session and make either way moves in the case of Euro and GBP on Friday, whether there is a non-farm payroll or no release of non-farm payroll. And that is what they had done. It made the drop. And then nominal gain was seen in the case of Euro, but GBP made for the drop. And also in the case of USDN and USDCHF, they made the small gain and then made the drop again. So they continue to make such volatile moves, but we need to understand the real purpose of such volatile moves. And be assured that the players are not here to give us money. They are here to grab our money. So in the process, one has to be a smart trader and read the hidden agenda and try to protect the positions of equity and the account and still try to earn money. It's a real challenge. But this challenge we can easily come out provided we use the market reading using the live market report page and try to find how exactly they are making the moves in the market, a differential move. For example, now Euro and GBP are showing the USD weakening move with a nominal positive net change. And in the case of USDN and USDCHF, they are showing negative net change. So it is USD weakening move. But in the case of commodity pairs, AUD is showing 10 pips negative net change and Canadian dollar is showing 9 pips positive net change. There you find the USD gaining move made by the commodity pairs. So this sort of contrarian move, they make majors showing USD weakening, the commodity pairs showing USD gaining move. This is one of the strategies to make or handle the commodity process because they find many of the traders when the spread is more between the high and the low, in the case of crosses, they think that it is a great opportunity to enter into the crosses. But the crosses needs different understanding. But they simply follow the charts and try to take the positions because the data released from various countries may not have a direct impact on those crosses. So they thought that only technicals can work in such currencies and they try to commit positions. But the players are here to handle the majors and the crosses in a contrarian way and try to bring in big volatile moves in the case of crosses. And for example, Euro Yen, now it is showing a negative net change and it is trading closer to the low. So we might think that, okay, Yen is near that of the low. Around 9712, 9703 is the low set for the day around 3:30 GMT. And Euro is closer to that of the low, 9561, 9567. So it's a buy opportunity. But you know that they can bring in a differential move. They can rise both and then suddenly make a drop, and immediately they will make a downward stop in here. And on Friday, you would have noticed that in the case of GBPN, they continue to make the downward stop. Also in the case of Euro GB, crosses they handled on Friday. So for that, we need to use the live market quote page in order to understand what they are trying to do in a given time. Now, so the expected market moves, and this webinar is being recorded, so you will be able to refer to it on a daily, or take a screenshot and try to refer to it, and if it is really useful, you can make use of it. Now coming to that of the levels. Some conditions. So Euro could form the low as 1.3550, 1.356 is the current low they have shown. And probably a brief downward move could happen during European session or something like that. And then subsequently they're expected to gain the levels. And we could see that it could gain about 300 pips, 1.3850. Still, the upward journey is intact. And later on, we'll understand that GBP drop was only a market sentiment creating move, and subsequently they will make a big move in the case of GBP in following weeks and take over Euro. As a result, Euro GB will make a big drop again. So currencies are here to make volatile moves, keep that in mind. And volatile are to be viewed as trading opportunities rather than becoming afraid of it. If we have the plan and if we have the trading strategy to limit the risk and maximize the profit, you will get rid of the market fear, and we should be in a position to capture the big profits during such volatile moves as opportunity trade. Now in the case of USDN, 97 could be the low, and they may breach briefly if they need, and 99 they could be able to reach. A consolidation for a prolonged period, and they are expected to make a quick upward move. 0.9025 they could be the expected low, and they are shown so far 9039. And in the case of high, 9450 could be the high, and they just reached 9873. And they are expected to make a gain up to 95 slowly, and then later on from 0.95 we should be able to come across one big go, a jump upward, and that will give enormous surprise to the traders. And you know that USD CAD was doing like that, and it was trading around that of the parity and slightly above parity. They made a quick jump to that of 1.05, and then subsequently they made the swings here. So that way they will just shift the trading so in currencies. Then in the case of USD CAD, 1.0275 could be the low. So far 0.292 they have shown it this week, and 1.0525 could be the high. The case of Australian dollar, slowly they are gaining the levels from 0.92 to 93 and 94. Again, when people become bullish and try to get a buy position, they could make one dip on the downside. And such dips could be buy opportunities, and later on they are expected to gain the levels to 96 area. So these are all the they made the drop instead of 1.65, they made the drop to 1.60 when it was around 1.61 level. So there it has gone against the expectations. So we need to use the trading strategy to limit it. And USDN, they made the expected move coming down to 97. And in the case of CHF, 91 was considered as a support, but they come to 0.90. And in the case of Canadian dollar and Australian dollar, they have been slowly making the moves and more of a sideways move, wide range swings. and as expected. So this I am making as a review since last Thursday I was not in a position to take up the webinar with some other work. Now coming to that of the market reading. See, unfortunately, in this fourth page, they just changed the timing. So I'm taking the GMT time from the FX Street homepage. So for the display, because here when they give the local time, so it is very difficult to understand the market. We have to track the market using the GMT time. I requested the providers and they are not willing to change it. Anyhow, this sort of obstacles are part of the game and we have to outsmooth them. Then, in the case of euro, 1.3561 was the low, 1.3575 was the high, and they are not reached the low or the high. So you find such a narrow range consolidation they have been doing it for the past 5 hours. And in the case of GBP, 0.6017 and 1.604, because when they seen the drop on Friday, people are hesitating to enter into the market, not even the swing trade, and or even the scalping. It shows very clearly that lack of volume. Because when the lack of volume happens, the spread becomes narrow. That is an indication of this. 97.03, 97.34. So in all the times you come across that spread is less than 40. So we cannot initiate any trade as such. Let them make the moves, then later on, during downward or the upward stop, and we can take positions. And 0.9039 is the low, 9073 is the high there, reached in the case of CHL. Then in the case of Canadian dollar, gain 1.029 to 1.0306, such a narrow range. Okay. In the case of Canadian dollar, they just cut the low high by 1 pip. That is the only way, only variation to come across. In 94.16, they formed the new low. 94.19 was the low, and 94.15. So in the case of Canadian dollar, they made just 1 pip higher move, and in the case of Australian dollar, 1 pip lower move. But 1 pip higher move, and they come below that of the initial high, and 3 pips lower, but they come above that of the initial low. So this is nothing but gradually making either way swings to increase the spread between the low and the high. So during the day, we will come across during European session, swing and quick price move. At that time, we can initiate the trades. Now coming to that of the market trading technique and trading. So we always, for the currencies, to form the initial lows and the highs, make a note of it. And when the spread becomes more than 40 pips during session start time, or will not cut the low for 30 minutes of our observation, or take the sell position near the high if the market has not breached the high for more than 30 minutes. Then do not take unlimited risk. Because if we use the stop, we lose the position. Instead, we can use the hedge, and we can make use of the hedge to other way trade also. So those sort of trades using the hedging, I will try to explain it tomorrow when I am trying to give the tracking the forex market together with them. In the schedule of webinar, we'll find the tracking the forex market together. Webinar part 1 is by 8 GMT and part 2 is by 15 GMT. So exactly this time, I'll be giving the European session webinar 30 minutes from the start of the European session. That is from 7:30 to 8 will be the first 30 minutes. So after watching it, we will try to take a position. And similarly, part 2 will be on the 14 GMT. 13:30 is the session start time, and 30 minutes after that, I will try to take the positions. So as soon as I start the webinar, I'll try to read the market and try to commit the positions, and later on explain to you how exactly such trading decisions can be taken, and also use the trading strategy to limit the risk and maximize the profit. Here I have given briefly how exactly the trading can be done. Then the important thing with regard to the market is the market timings. Many of the traders follow the local times and invariably find that they are not in a position to read the market, because we have been asked to use the market timings wrongly. People might get angry when I say this, but that is reality. And if you follow the timings followed by that of the players, then you'll be able to really understand that they make decisive moves during such time. And this time, FX Trade was kind enough to set the timing, European session time, tracking the forex market webinar at 8 GMT and 14 GMT as I requested, so that I'll be able to really demonstrate to you how exactly we can read the market and take the positions. And almost 90 to 95% such trades will make profit unless and otherwise some unexpected moves happen. Still, we will use the hedging order to limit the risk. So early in the late sessions, they handle the majors, and the mid sessions, they handle the crosses. The session timings are given here, and this is followed during the daylight saving system, and then subsequently by end of the month and next month we will come across the daylight saving system is switched off, and then the timings will shift slowly in the US and followed by that of Europe. And I will try to give those timings also. So always keep it in mind, these timings with regard to the daylight saving system is the same forever. I have been noticing it for the past 20 years and they have not changed it. Similarly, daylight saving system switched off, you follow a different time. It's like shift in that of the timings of the sessions, and that is also being followed. And similarly, they handle only two currencies at a given time that you have to keep in mind, and you have to identify what are those two currencies and try to take the positions in them. Or if you have missed that currency, then you can find out, okay, what is going to be the next currency? Suppose they handled GBP and yen first, or they handled or dropped USD yen and Australian dollar first. They made more than 40 pips. Suppose if they make more than 40 pips spread between the high and the low in USD yen and Australian dollar, then you understand that, okay, it is the Asian session, so obviously the traders will be active in those currencies and their respective process, so they are handling it. So what is going to be the next European session? They will handle Euro and G. So when they make a dip or understand how the trend is, and accordingly you can take the buy positions, you'll be able to see the profit easily. Instead, during the Asian session, if you think that, okay, I'm only sentimentally attached to euro, I find that euro is a safe currency to trade, and then commit a position, you may have to hold the position just like that throughout the Japanese session, because they may not handle it at that time. So always try to be an opportunity trader. Find out, not looking into the individual charts. When you look into the individual charts, then you'll find USDN drop and USD CHF. Now everybody is bullish at the case of Australian dollar. When it has gained the levels, you find how exactly the commodity the traders to commit positions by spreading the informations through various channels. And knowingly or unknowingly, many of the analysts follow such things in order to present as if use to the traders. It's very unfortunate. I'm not trying to blame here anybody, and that is the way the players have set everything. Now, so I'll come back on 10th of October on Thursday and review the forecast what I have given and also do the market reading and trading ideas for Thursday and Friday. And before that, tomorrow, I'll be presenting tracking the forex market for the webinar. And 8 to 8:45 GMT, I'll give the part 1 and try to take the positions and try to close the position within the session and explain to you during the part 2 how exactly I handle the trades. And you can also track the trades by taking the positions in a demo or just take a trade and find out whether such trading ideas work for you. Then let me answer to the questions which are here. Understanding. Can you please explain the strategy for process tomorrow during? Yeah, I'll explain tomorrow during the webinar. Then Mohan Kumar, AUD is a negative. He leads the rally, and so euro may drop. You just watch today, then we'll be able to understand. As I explained, the first week they just rallied it, and then subsequently they lag behind using some excuses. Okay, so thank you one and all. And take the twin webinars. Then later on 10th, I'll review the forecast one. Thank you. See you tomorrow.